ACH fraud rarely starts with a massive loss. It usually starts quietly. A small spike in returns, a few unauthorized claims, or a pattern that looks almost normal. Banks don't wait for fraud to explode. They monitor risk continuously, and today we're breaking down how ACH fraud and risk monitoring really works, and what originators must do to stay ahead of restrictions. By the end of this video, you'll understand how banks monitor ACH fraud risk, what metrics trigger reviews, how unauthorized return thresholds work, and how originators can detect problems early. You'll also learn how to build internal monitoring that aligns with what banks expect to see. ACH fraud isn't always an obvious theft. It includes unauthorized consumer debits, account takeovers, synthetic identities, friendly fraud, and repeated payment disputes. Many fraud cases begin as returns before they're ever labeled as fraud. Banks are responsible for managing network risk. That means they look for early warning signs long before losses occur. Rising return rates, repeat NOCs, unusual transaction spikes, and first payment failures all raise red flags, especially for consumer web debits. Not every issue is fraud, but every issue is risk. Fraud risk involves unauthorized activity or deception. Operational risk includes weak controls, poor validation, or inconsistent authorization. Banks don't separate these cleanly. They look at the outcomes, not the excuses. Banks track several ACH risk indicators: unauthorized return rates, total return rates, first-time debit failures, repeat failures by account or user, volume spikes or velocity changes. These metrics tell a story about how controlled or uncontrolled an originator program really is. Unauthorized returns are the most serious signal. They indicate that consumers are disputing debits or claiming they never authorized them. Even small increases can trigger reviews, because unauthorized returns directly affect consumer trust and network integrity. Fraud often shows up as abnormal behavior. Sudden increases in transaction volume, changes in average dollar amounts, or unusual timing patterns are all indicators banks watch closely. Legitimate growth looks different from suspicious growth. The first debit is the highest risk moment in ACH. Many banks apply extra scrutiny to first-time consumer web debits. High failure rates on first payment signal weak validation, poor authorization, or fraud exposure. Banks don't look at transactions in isolation. They look for patterns across time, customers, and channels. One failed payment may be noise. 10 similar failures across new accounts is a pattern, and patterns drive action. A bank review can be triggered by rising unauthorized returns, repeat NOCs that aren't fixed, poor response times to proof requests, customer complaints, regulator or network alerts. Once a review starts, expectations escalate quickly. During a review, banks may request authorization proof, validation procedures, monitoring reports, and corrective action plans. Delays, incomplete responses, or inconsistent explanations increase risk, even if fraud hasn't occurred yet. Originators shouldn't wait for banks to detect issues. Strong programs monitor their own data daily or weekly. That includes tracking return rates, unauthorized claims, NOCs, reinitiations, and transaction trends. Every originator should maintain a simple risk dashboard. It doesn't have to be complex, but it should clearly show return rates, unauthorized percentages, volume trends, and exception counts. Visibility is the first layer of control. Fraud prevention isn't one tool, it's layered controls. Strong authentication, account validation, transaction limits, velocity checks, and consistent authorization proof all reduce exposure. No single control works alone. If you see unusual patterns, escalate early. Waiting for confirmation often makes things worse. Early escalation allows containment before losses grow, and shows banks you take risk seriously. Scenario: your unauthorized return rate increases slightly, but total volume is stable. Do you ignore it, wait for a bank notice, or investigate immediately? Pause and consider the safest response. The correct response is to investigate immediately. Small increases are early signals. Early action prevents bigger problems, and shows maturity if your bank later asks questions. Every originator should have a fraud response playbook. This includes escalation paths, account freezes when needed, communication templates, corrective action steps, and documentation standards. Playbooks reduce panic and improve outcomes. ACH fraud doesn't announce itself. It reveals itself through patterns, metrics, and behavior. Originators who monitor risk proactively, respond early, and align with bank expectations protect their programs and scale safely. Next, we'll cover ACH audits and bank exams, what reviewers look for, how to prepare, and how to survive an audit without scrambling. Subscribe so you don't miss it.
Disclaimer: this content is for educational purposes only and is not financial, legal, or compliance advice.